Good morning. Yeah, right, Joe. Let's get rolling here. Getting late already. All right. Hope everybody had a great holiday and a little time off there to relax. So we start the day with a another gap up, which has been what's been going on the last several days, trading days. Right. This one was a little minor gap up, and then a bigger gap up, and then a bigger gap up, and now another gap up. Right above these highs and into what started out with a bear island reversal up here, right? The gap up the several days sideways and then the gap down. So as prices come up into that area of the unfilled gap up there, I'm thinking it's a bull trap. 4 days, 5 days up, a bigger gap up, well, the only thing it's got going for it, it's gapping up above the high of a red bar versus gapping up above the high of a green bar. So a little bit of the fuel, so to speak, of running out of fuel of a bar closing near the high, a green bar versus the backing off near the end of the day before the holiday. So gapping above the high of a red bar. So let's just say the bulls have that on their side as far as that goes, but nonetheless, down at support, up at resistance, gapping above here and into this other level of resistance. Historically, I think it stalls here. Now, it doesn't mean it's going to collapse, because the concept of the retracement here, having the ability to retrace from what was potentially where prices would go down to retrace this far, is positive. So when I say bull trap, I'm saying buying today, right, this morning, after several days up and a gap up of this significance into resistance, just flies in the face of common sense and historical patterns. So, a little caution here as far as jumping on board the moving train, so to speak, right at what we would call the destination from support to resistance. So, with that being said, we'll go to SPX today. Well, let's see where the futures are first. So here we go, a move up, and while they've got a little room, still 1, 2, 3, 4, 5. It's the beginning of the day. Now, Alex is telling me futures are completely different than ETFs. Well, does the tail wag the dog? I don't think so. So the majority of the world is following this chart, and which the ETF is based on, and the stocks that are within it. Futures traders are just following momentum and just looking at what's going on there, and as long as it goes up, they will buy. Hedge fund managers, mutual fund managers, money managers will be looking at this, and probably the Dow, and just say the cash charts for making decisions. So any of them that employ a technician is going to say, well, you went from support to resistance, gapping up to the next area of resistance. If you bought down here, it's probably a good idea to take some off the table. So we'll just see how that all unfolds, right? Maybe if it can hang up here. So we always look at things in an objective point of view, right? This is what it is. So when we look at the chart, there's really nothing here to analyze as to what it is, meaning this was support, this is resistance, 4 days up, gapping up a 5th day, odds are there's going to be sellers there. Now, if, say, after 20, 30 minutes, and we look at this chart, and let's just say that it went sideways, dipped down, and buyer stepped there, and it came right back up again, that would be bullish price action. Right? So we'll just see how it all unfolds. We've got this to deal with here. And I said several days up and gapping up into this area. So wait a little while and we'll see what happens. Now, as far as SPX goes, right, the stiffest area of resistance is going to be if it can get up here. So looking for premium up in this area would be ideal. And for the downside, I think, so even if it's gapping up here, I think down below this 3120 area, if there's premium, would be safe. So with credit spreads, we're always looking at what would be safe. Now, you can see the way things advanced last week. And then we got the gap up on the last trading day, and then it pulled back. And so there's very little support if this actually does start to break. And you can see the advance. This is the biggest area of consolidation. So as we look to the left, this area, let's just call it the protective fence, so to speak. Down below here, there's nothing to stop it. So if we do get a pullback in the morning, selling a spread somewhere, we can, as you all know, those that are doing them, the further that we get away from what we perceive to be the danger zone, the less premium there's going to be. In other words, you get paid to take risk, but the risk with a credit spread is extreme. So warriors get destroyed with this vehicle that try to get lucky, whereas those that get further away and survive are the ones that walk away with the prize the majority of the time. All right, let's move on to other markets. And so multiple days up, right? Pulling back 1, 2, 3, 4, 5. It's the beginning of the day. Maybe it could extend it a little bit further, right? But multiple days up, greater than 100% retracement, momentum is going to stall. Right? Now, historically, that's the norm. Right? Are we going to have a blow off here because more coronavirus nauseating information? I don't know. Anyway, as we look at what's going on here and looking at intraday, we've got this sideways consolidation. We got a momentum move higher on the 60-minute chart, buyer on the dips initially. We got a topping tail over here. And so common sense, breaking below there opens up the door to moving lower because there's nothing to stop it. So we'll see. Can it clear here? I'm not really interested if it can clear here, other than if this red bar flips right back up again, well, then maybe as a scalp. But after several days up, sellers are going to come in here because that is just how things work, right? Like I said, common sense. The more days up you have, the greater the probability of profit taking. And now we've got the markets gapping higher at the open here. So up, big gap up, just going sideways up here around 256, 255. Gapping up into here just looks like an invitation to sell. Hey, Greg, would you ride Tesla? I mean, maybe in a rocket ship. Asking me on YouTube that Tesla. Dan will go over Tesla. It got an upgrade today. I forget to what price. They said 1,500. So, something starts moving up as it is, you got to be careful. It's going to come in like under normals, price action. It doesn't mean it's going to collapse. But, if you buy the high and it pulls back, 200 points, which wouldn't violate the trend, it could be painful. All right. So there you got the Qs gapping up into here. All right. Same story. You can see just chopping sideways here for a while. And just, again, all we have is historical price patterns to go on and common sense. So one of the patterns that is quite common with indices where they're going sideways like this is that they have a tendency at the open, when they're up like this, to follow through and trap novices, meaning they poke up above here and then immediately come right back in again, where people get long right at the open. Oh, let's trade the breakout. Well, it's already up considerably. So that gap up is like multiple bars moving higher in a momentum move. Same thing I showed you right over here. But with the ETF, it's gapping up, and it's the same thing going sideways. So a lot of times at the open, what I've referred to in the past as a gotcha trade. I mean, it pokes up and immediately comes back in again. And of course, now that gets traders to start selling. Those that bought here say, oh, look at what happened. And they start getting out. And the ones that bought along here say, oh, there's no place to stop it from going down. I better take my money. And it feeds on itself. Dow is up almost 400 points, right up into the 200-day moving average and into price resistance. It's been the one showing relative weakness. Obviously, a place where there's going to be sellers. Same intraday pattern here. Up and down slop. Pre-market. Not a very attractive pattern. Russell popping up as well, right under its 200-day moving average, right into these topping tails. Potentially an M top. Got a wide range bar poking up into a topping tail bar. So we'll see if this can keep going. And this is typical historical textbook M top pattern. Hasn't followed through yet. This bar is not even close to being done. 45 minutes left to go in this bar. But the pattern of itself is developing as such, meaning a momentum move higher. The left side of the M has a topping tail which cleared the prior highs and came back in again. Very shallow retracement. Buyers are aggressive. And then it comes up to retest that topping tail. Now, this bar needs to trigger by coming back down below here. So something to keep an eye on as well. And of course, we've got it beginning to develop less so over here on the 5-minute chart where you can see this retest that's going on. If we change that to a 60, I don't know that it's going to look quite the same. Not at all. But again, you can see the gap up. And so as a reference, if you're looking at the ETF, a break below that wide range bar would start bringing in sellers. And it's gapping up. You can see same thing into the 200-day moving average and the prior high. Bonds are down a bit. No big deal. They are at resistance. All right, so backing off from that area. And you got oil just moving sideways here. Actually, I guess holding up relatively well. There's nothing to the left here except this unfilled gap. But after this move up, several weeks of holding up. Now the question is, can it clear these highs? Or does it break below? So it's one of those patterns where you keep an eye on it, but it doesn't make any sense to get involved at this point. Gold just continues to hold, but a lot of churn. Just, my perception is just waiting for the broader markets to break, and they haven't done so, other than this correction that they've been in over the last month or so. And this just looks like it's going to keep going higher. And it's stalled at 1800, which is scrunching that up there. I went a little too far. You can see the resistance there, but so far, just been holding up really well and got the big red bar being reversed, a bullish 180 reversal and back up again. So it continues to have bullish price action in gold and silver. We're waiting to see. Is it ready to start to bring up the rear? It's stalled right at this resistance here. So silver's been moving up here. And I think, as long as gold holds up here, silver will continue to follow. And if it can clear these highs, it's got significant room to move higher. Keep an eye on that. All right, all yours, Dan.
Yep, sorry about that. Yeah, thanks, Tom. Yep, sorry. Yeah, hope everyone had a great weekend. We only have one open position in the weekly options trader put spread here, and it's fine. But we have 20 or 21 longs in our bullish positions in the swing letter, so everything's fine. So let me just go through gappers before we look at any of those. But I did send out a text alert to sell a third of our Ballard. We did a beautiful 1, 2, 3. This sector has been acting very well. The power and battery and electric sectors, and it's getting extended. It would have been a core trade if we got it down here on this weekly breakout, but we got kind of a second resting swing trade, and we have beautiful open gain right now. We'll take it. SMH looks like that wants to break out today. Bullish consolidation, rising 20. But the problem is, even though we continue to see bullish patterns, it's, as Greg's been talking about, getting on board right now is not as not easy as it was, at the turn. Let's see. JR's asking about NVTA. Gapping up, going sideways pre-market, very bullish gap right here, bullish consolidation. Friday was a holiday, so I got to keep that in mind. So Wednesday actually was a good place to add. Right, I don't know, right here, market overbought. I personally would like it to consolidate a little bit more because it's up 4 bars, so you don't have a good framework of where your stop would be for a new trade. Neo, yep, that thing's been on fire. Remember, we bought this as a swing trade way the heck down here. Wow, that's sure has been on fire. You are right. Someone asked earlier about Tesla. We definitely don't swing patterns like this. That we actually did a 0 DTE call spread on Friday. Gapping up after big move up. We did it right here. We just nailed the entry. See how it came in, it bounced. Then, bar by bar analysis, this is what we do. This green bar right there, topping tail was a big green bar at the high. Under the low of that green bar, we sold way out of the money, 0 DTE call spread. We had, no gap risk. Now gapping up again, there's no pattern whatsoever. If you were long it, I'd just be in trail mode. I'd personally be selling half pre-market, 30-minute low, stop for the back half. If you're thinking of buying it, it would only be if you got an intraday setup for a day trade. That's our approach. Derek, your NUS, yeah, that was a beautiful gap on Friday or Thursday rather that we looked at, and the gap was too big for me to want to chase, but it looks higher. That's an incredibly strong 15-minute chart right there. Let's continue. WTRH, nice multi-month consolidation here. The gap's too big, but let's say it wasn't gapping today, then I would have said, yeah, you can buy it over Thursday's high. Because it broke out, slopped around, higher high, higher low bar, bottoming tail, little breakdown failure here. But now it's gapping too much. Yeah, I got Solo right here. Solo, I just saw in the company name. It looks like a little electric vehicle company. These, that's what our workhorse is, but there's just no pattern right now, unfortunately. It trades very sloppy and there's no pattern. Workhorse on Wednesday, or actually Tuesday, on the gap up day with intraday entry, we did add in the money call spread, took our money the following day, and it's still on my list. This is that electric truck company, and these are in play right now. But you give me the right pattern, we'll short it. And I love shorting the out of the money call spreads. I looked at this over the weekend, and the $35 calls are still jacked with premium for July. It's nuts. And that's what happens when you get greed or fear skyrocketing. They're both will skyrocket that implied volatility. Fran, wow, that's what we call a bullish gap negated. That was no, look at that. Went up to $9 or so on Thursday, and then got cut in half. Now it's gapping down again. That's a big stay away. I don't know what's going on there. Blink, another sector, charging, electric, it's the same as our Ballard, but look at this monthly. That monthly is a bull 1, 2, 3. Even though this bar is only it's less than 6 days. It's only 3 days of last week, or 4 days rather. So this is only 4 days, shortened week, but this looks good. So I'm going to keep Blink on our list. But the problem is, look at, this is multiple time frame analysis. Look at the daily and the weekly. The weekly's up. The weekly's a climactic sell setup with wide range ending topping tail. So so I like the monthly, but there's no entry on the daily or weekly. Grub. Yeah, I think this must be gapping up. My guess is because Uber bought a competitor. All right, food delivery service. So you just got to work an intraday entry, but that's a bullish daily. Twitter long. Twitter's not a good pattern to go long. It's actually a sell setup. It is gapping over on Thursday's high. I mean, maybe it's a day trade, definitely not a swing because you still have a price void here. But you got all these 3 overhead converging MAs. But I'd say 30-minute high. Lorena, if you'll also put your drop down to all panelists and attendees. So 30-minute high, let it, what 30-minute high means is you let it trade for 30 minutes until 10 a.m. Eastern. And then 1 penny over the 30-minute high, you can go long, provided it's not too extended. And this is the next resistance area. Juan's asking about Microsoft. Yeah, I did see that. It's on my permanent thumbnails. And it is a bullish gap up. This was a buy setup. right here, buy setup on the support, bottoming tail. So this was your entry. Right now, I would just be in trail mode. And you got a little breakout failure, as we did on the broader markets, are all coming in right now too at 927. But look, that's a textbook breakout failure. I mean, the gap makes it actually not textbook, but bullish, inside bar, trading under the inside bar. So that there's no trade right now. So I'm going to be in just management mode here on our opens. Not looking at, I haven't found one tier 1 for a new entry. Ahmad, Baba 230. No, the gap's too big. It's, you know, this is sloppy for one thing, but now it's gapping up over these highs. There's no pattern for me. On Kroger, I don't see any great pattern. It is a buy setup into this WRB, but look at the 15-minute chart. It's in a trading range slop. I see no great pattern. I mean, it was an inside bar to Wednesday's big red bar topping tail. I am not going to be in a rush here, folks, getting into anything. Region, I think, had some positive news on the vaccine, gapping up, put spread candidate. Got less than a minute to go. Solo. Solo, another one of these, I think we already looked at, electric car things. William, JD. Yeah, that ain't bad. 30-minute high. Yeah, because at least it's gapping from this consolidation. I'll put that on the list. Qualcomm. I like that one's. It does look higher. We actually have that as a put spread idea, and I also like it. You just need an intraday setup now, but it's a definite watch. I'll go back to gappers here. Tesla we looked at. Look at this disaster du jour. This was actually a bullish 1, 2, 3 on the daily, so it must be a bio is my guess. Look at this, $12 down to $3. There's some pain there on the bulls. Yeah, let's sell half of VIPs, gap in here to a prior high, move stop, 30-minute low.